John Higgins, Mortgage One. Happy Monday. So, got a big economic news week. We're going to get the retail sales number on Tuesday, followed by the all-important jobs number that was delayed due to the partial government shutdown. Should have been out last Friday. We'll get that on Wednesday. And we're going to finish up the week with the consumer price index, which will give us a glimpse at inflation. So it should be a volatile week, especially starting around Wednesday. Where do we start out the week? Well, we find ourselves in pretty good shape. We're at 420 again after losing touch with 4% earlier in the year. We did get all the way up to 430. We've talked about that 420 level being important. We're back there waiting for the jobs data and the inflation information coming out this week. If we get some bond-friendly numbers, maybe we can break below 420 and make another run at 4%. That would certainly help with affordability as we're kind of stalled out here just above 6% on 30-year fixed mortgages. Not much of a change from last week, so no real improvement on affordability. I did want to bring out a program that I think is underutilized in our industry. If you have a listing that needs a little bit of work, this is a great program to advertise. It allows the buyer to finance pretty much all of the repairs up to 97% loan to value on a Fannie Mae home style renovation program and 96.5% loan to value on the FHA 203K, which I think most people are aware of. Fannie Mae's home style is great because it allows for quite extensive work. You can add on to the property, knock down walls, bathrooms, roofs, all of that with very little down, even on the investment side. So if you have an investor that's looking at a home that needs a lot of work, that they can unlock that equity, minimum 15% down. That includes the financing of the repair. So think of it as a home that somebody is buying at $200,000. They put $50,000 worth of work into it. They can finance up to 85% on an investment property of the total. Single family residential, they could finance up to 97% of that total. The FHA 203K works very similar to Fannie Mae's program. It does pick up buyers with credit scores that are lower or somebody that needs a higher debt to income calculation. We offer both the Streamline and the Full. So the Streamline offers kind of minor repairs, no structural issues. The Full, which is a little more involved, requires a HUD consultant. We can do much more work there. So these are great programs if you're looking for a buyer that wants to buy a home that needs a little TLC and finance those repairs, or that property that just isn't moving because it needs so much work. Just offer it with an option to finance those repairs as part of the mortgage, and hopefully that'll get that property sold.